What's going on, guys? Thank you for tuning into this episode of Twin Finance. My name is Dylan, and today we're going to be talking about buying your first house. And now I know this seems pretty, common, obviously, for everyone. They want to get a house eventually. I mean, not everyone, but let's just say, the general population's going to want to get their first house, and you think it's probably a pretty easy, it's easy. You just go to the bank, get the mortgage, and whatnot, guys. But there's a lot of. I'm just going to hit you with a couple of quick facts here that probably surprise a lot of first home buyers. And the first one is going to be, you need to have at least 5% down to buy a house. So let's just do the quick math, guys. If you want to buy a $200,000 home, which, obviously in today's day and age, 200,000 in most areas, isn't that much for a house. So, I mean, that's pretty reasonable, guys. You're going to need at least $10,000. So 5% is $10,000 to put down on that house before the bank's even going to lend you a mortgage. Now that's just where I live. You might need to double check where you live, but you're going to need at least 10K to put down. And then on top of that, since you only have the minimum 5%, banks like 10% at least. So if you have 10% to put down, guys, obviously quick math on that one, $20,000 to put down, then you're out of the gates pretty clear there. And that's what they like. The banks like 10% down at least. But if you only have 5% to put down, that's not to say they're not going to lend you the mortgage, but they're just going to require you to get mortgage protection insurance. And basically what that is they just tack on like an extra, few $1,000, maybe in this case only like $1,000 or $2 onto the mortgage, and then that basically, takes care of, because you didn't put down the 10%, they'll just put that into the mortgage and have you pay that over time, and obviously that'll boost your payment up just a little bit, not too much, guys, but basically over time, it's kind of your penalty for not having 10%. If you want to look into the exact definition, you guys can just Google that one. I'm not 100% quite clear, I can recite the definition to you, but yeah, guys, so basically, I would shoot for 10% at least. If you're getting rushed out of your house, and maybe it's just a bad situation for you, it's not a bad idea to do 5%. And if that's all you can do, maybe you should consider renting, but that's really a scenario thing, guys. But yeah, 10% is super ideal, for banks and especially for yourself. I mean, obviously the higher down payment you have, the lower the monthly payment's gonna be. So I'm just gonna run you through some other things that I think that you should be wary of. And with the new house, I think a lot of people don't realize the costs that add up over time, and especially the ones that they don't really think about, because I think this is what most kids do, and not kids, I mean young adults and people looking to buy their first houses. I think what they really do is they just go online, they go on TD Mortgage or TD Mortgage Calculator in the States, whatever, JP Morgan Chase Mortgage Calculator or whatnot. And they go out and they see, like, they do a $200,000 mortgage, the monthly payment's only like, let's just say, $900 or whatever. Let's say it's $900 a month on 200,000. It's probably right around there, depending on the interest rate. Anyways, for this example, let's just say 200K mortgage is going to give you, let's just say it's $900 a month. So let's just say that's your payment. Now people probably go, I can make $900 a month payment like easy. That's not a big deal. Like, okay, I can afford $200,000 mortgage, guys. And I think, I'm not to say you can't afford it, because depending on how tight your budget is, but if you think, you can slimly fit $900 a month into your mortgage, not gonna work, guys. You gotta pay property tax, because they're not gonna factor that in on the mortgage calculator, because they don't know where you live. So you're gonna need to pay property tax, and these are just the general ones, property tax, which in some areas are higher. So you might want to look into that. So if you're looking into a house, should check in the property tax in that area. Could be an extra couple $100 a month on that. So you're already up to $1,100. Mortgage brokers, they're going to sell you mortgage insurance, probably without you knowing it. So you should probably check into that before you sign the mortgage papers, because obviously they're going to get compensated more if they sell you mortgage insurance. And a lot of people go for it. I'm not saying, I have a video on the channel, and I mean, it's better than nothing, but there are a lot better other insurance products out there that you can get for cheaper and that are more valuable, in my opinion. I have a video on the channel, I'll put it in the description, the link below. But a lot of mortgage brokers are going to sell you mortgage insurance. They'll just put MI for mortgage insurance, and that could be another extra $100 a month. So we could already be talking, depending if you're a smoker, that's going to be more. Especially, maybe you have a disability, they're going to boost that up. That's just how insurers are, guys. So let's say it's an extra $100 a month. You're looking at $1,200 a month. And another one, obviously this is going to depend on what kind of house you're looking at. But all houses, guys, they tend to just need some work. And I'm just going to write work. And maybe it's not right now, but maybe in the future, you can't sleep on, guys. If the house is fine right now, but in 3 years it needs a roof. Well, if that roof is $10,000, that's like an equivalency of like $300 a month for 10 years. $300 a month for 3 years, for that 3 years. So you're probably gonna just put that in the mortgage when you refinance it, let's say 5 years. Let's say in 5 years you needed to redo the roof for $10,000, you'll probably just refinance that into the mortgage. So over time, guys, the work really does add up with homes, and obviously people pride themselves on their home. So if someone comes over, they don't feel embarrassed and they want people to tell them their house is nice. So you're probably gonna be more than likely to spend at least a couple $100 a month just on like things going into your house, paint, if you want to change stuff, furniture, change up like, the seasons and stuff like decorations and whatnot. That all adds up, guys. Money doesn't just go away because you chose to spend it like not in your monthly expenses. It's still there. You still have to factor it in. So I'd say at least another couple $100 a month, easy. So we're already looking at, $1,400 a month, and that's a lot higher that's 50% higher, 60% higher, 55% higher than that $900 a month you're expecting. So I wouldn't try and look for what you can afford, guys. So basically what I would do, guys, is so factoring in all those things, let's just say you should do a budget. If you're thinking about getting a house, you should really, nail down all of your expenses. We also have a video on the channel about that. Write down all your expenses and write down how much you make, and determine, let's just say your monthly cash flow is $2,000 after, groceries and everything. Like I'm talking everything, guys. Let's say you have a monthly cash flow of $2,000 and you're just at home, and you're thinking about, getting a house. I wouldn't recommend anything more than like $1,000 a month in that situation, guys. Just for that, because I think, unforeseen things come up. You also want to keep investing, obviously. Take a look at videos on the channel about that too. You obviously want to invest. You obviously want to, spend some money on the weekend. You want to take your girlfriend out or, your boyfriend out for a date. You want that money coming in too. So, that's just my situation. It's going to really depend on how flexible you are. But basically, let's just say the bank approves you for, in this case, say you have $2,000 a month. When they think they're probably going to approve you for somewhere in the ballpark of like $1,700. Like the bank doesn't care really about if you want to go out on the weekend. They want to know if you're going to make your mortgage payment, and if you can, and you don't want to lose your house, right? Because how devastating is that to tell someone I got to sell my house because I can't afford it, or the bank repossessed my house because I couldn't make the payment. So people really pride themselves on paying their mortgages. So the bank's going to approve you for something high. I would recommend just stay away from. Go to the bank and ask them, what, this is how much I have down, how much can I afford? Whatever they tell you, go to like 60 to 65% of that. Maybe let's just say straight on dollar sign. Let's go to stay like 60 to 70% of that is what I'd probably recommend, guys. I wouldn't go anywhere near the high. Like I said, there's just a lot of unforeseen things. Now, obviously, if you have a second income earner, it's a different story. But for this situation, I'd handle it that way. And like I said, with homes, there's just a lot of things that go into it. How much renovation work you need to do, updates and whatnot. If it's a brand new complex, hey, maybe you need to do the basement or whatnot. But yeah, guys, I hope you really grab some value from this video, because I know buying a home can seem so simple, but yeah, it's probably so confusing for a lot of people. And I know a lot of you guys watching my videos are probably in and around that range of, in the next few years, probably going to look to be, buying your new first house. So those are just, I hope I really enlightened you on some things that can come up, and just gave you like a little bit of a guide towards, going about your house smartly, so that way you're not swimming in, student loan debt, car debt, and now you got, you're swimming in just in debt. Now you got your mortgage to pay for. So I really don't think it's a smart choice to make you yourself house for. And like I said before in the video, obviously you need to keep that investments going because that's how you build wealth long term, guys. Hope you had a lot of fun watching this video. If you enjoyed it, please leave a like and subscribe. Thank you guys for watching. Have a great day.